Picture this. You're about to witness two very different worlds unfold in the same market at the same time. One is ruled by emotion, the other by logic and code. It's a Tuesday morning, the London session is just heating up. The city is alive, and so are the markets. Currencies shifting, traders glued to their screens, every second charged with possibility. Meet Mark. He's hunched over 6 monitors, sweat beading on his forehead as the GBP-USD trade moves sharply against him. His eyes dart from chart to chart, searching for hope in a sea of red. His carefully crafted strategy, forgotten in the heat of the moment. His emotions, they're running the show now, clouding his judgment and fueling his stress. Every tick, every price movement spikes his anxiety. He's tempted to move his stop-loss, desperate to avoid a loss, even though he knows it breaks his own rules. This is the daily reality for most manual traders. Emotion-driven chaos, where fear and greed battle for control. But let's shift the scene. Now, meet Sarah. Sarah is trading the same session, but her world couldn't be more different. She's calm, sipping her coffee, reading a book, glancing at her charts only occasionally. Her phone pings, a gentle notification. No trade signal met criteria today. System is idle. There's no rush, no panic, just a quiet confidence in her process. No stress, no panic. Her bot is in charge. The algorithm she built is scanning the markets, making decisions based on data, not emotion. Sarah spent weeks, even months, coding and rigorously testing her system. She's pored over historical data, tweaked parameters, and ensured her bot can handle the unexpected. Now the bot handles everything: analysis, execution, and risk management. There's no fear, no greed, just a set of rules executed with machine precision. Mark's trading is a psychological minefield, every decision a potential trigger for stress or regret. Sarah's approach is systematic, detached, and almost serene. Mark's emotions sabotage his results. He chases losses, makes impulsive trades, and often holds on to losers far too long. His inconsistency is his downfall. Sarah's bot, on the other hand, creates a barrier between her feelings and her capital. The system doesn't care about a losing streak or a winning run, it just follows the plan. She manages the system, not the trades. Her job is to monitor, review, and refine, not to react emotionally to every market move. Her focus is on long-term consistency, not chasing short-term wins. She's building a track record, not gambling on the next big move. The difference is clear. Automation removes emotion from the equation. It transforms trading from a roller coaster of feelings into a disciplined, repeatable process. Mark is fighting himself, battling his own instincts and impulses. Sarah lets the code do the work, trusting the system she's built and refined. This is the promise and the true power of automated trading. Freedom from emotional turmoil and the potential for consistent, disciplined results. You'd think prop firms would fear bots like Sarah's, right? Actually, they love them. Most bots fail, fast. They're built for signals, not for the firm's strict risk rules. Prop firms profit from evaluation fees, knowing most bots will crash and burn on drawdown limits or news events. The real business? Watching traders fail, then try again with another bot. Prop firm challenges aren't just about making money, they're psychological traps, designed to push traders to their mental and emotional limits. Every decision you make is under a microscope and the pressure is relentless. It's not just your trading skills being tested, but your ability to stay calm, focused, and disciplined when everything is on the line. The carrot is clear. Hit an 8 to 10% profit target, and you're one step closer to managing real capital. It sounds simple, almost achievable, and that's what draws so many in. The promise of a big payout for a relatively small gain is incredibly tempting. But then comes the stick: strict daily and total drawdown limits that leave no room for error. These rules are unforgiving, and even a single misstep can end your challenge instantly. One bad day, one momentary dip, and you're out. No second chances, no opportunity to recover from a normal losing streak. The margin for error is razor thin. Most traders don't fail because their strategy is fundamentally flawed. Instead, the rules force them into a state of constant fear and anxiety, leading to mistakes they wouldn't normally make. The psychological toll is immense. A string of normal, statistically expected losses can violate the drawdown and end your challenge before you even have a chance to recover. It's not about being a bad trader, it's about surviving the gauntlet of rules. Fear of losing takes over. Traders start cutting winners short, skipping valid trades, and second-guessing their own systems. The pressure to avoid mistakes becomes overwhelming. As the deadline looms, desperation sets in. Some traders overtrade, taking unnecessary risks in a last-ditch effort to meet the target. only to dig themselves deeper into trouble. The real opponent isn't the market, it's your own psychology under pressure. The challenge exposes every weakness, every doubt, and every fear you have as a trader. Prop firms don't need a better strategy, they just wait for you to self-destruct. The system is designed so that most will fail, not because they can't trade, but because they can't handle the pressure. The challenge is a test of discipline, patience, and emotional control, not just skill. Only those who can master themselves stand a chance of passing. Most traders crumble under the pressure, walking away frustrated and doubting their abilities, even if they were profitable before. The rules are designed to exploit human weakness, to turn your strengths into liabilities under stress. Every guideline is a psychological hurdle, that's why so few pass. In the end, it's not just a test of your trading strategy, it's a test of your mind. Bots promise to remove emotion, but most are just signal generators. They look great in backtests, but ignore the real challenge prop firm rules. Does your bot know about the 5% daily drawdown, the no trading during news rule? Most don't. So when volatility hits, the bot opens multiple trades, breaches the drawdown, and fails instantly. The trader is left confused. The bot was supposed to help, but it just failed faster. The illusion automation without risk management is just faster self-sabotage. Prop firms don't care about your win rate, they care if you follow their rules. Most bots are blind to the real game. They're fast, but crash at the first turn. Automation without compliance is a recipe for disaster, that's why most bots lose. Even with a risk-aware bot, the human factor remains. Traders become micromanagers, unable to let the bot do its job. If the bot sits idle for days, impatience takes over. Manual trades sneak in, usually losing. A couple of bot losses? The trader tweaks settings, chasing perfection and destroying the edge. The urge to intervene is overwhelming. The result? The trader overrides the very system meant to protect them. Bots can't fix broken psychology. They only provide a framework for discipline. If you can't trust the bot, you'll sabotage it. Prop firms count on this. The pressure, the rules, the time limit, they know you'll crack. Most traders become their own worst enemy, even with automation. The firm profits from your inability to let go. Discipline is the real edge. I watch traders fail, bot or no bot, and realize the focus was wrong. The real challenge isn't predicting the market, it's surviving the prop firm's rules. So, I built a bot with risk management as its core. First, a hard stop for daily drawdown. If equity drops 4%, all trades close, no new trades that day. This buffer made it impossible to breach the 5% rule. Next, total drawdown protection. The bot adjusted risk per trade based on distance to the loss limit. As the account grew, risk increased. During drawdowns, risk shrank. The bot got smaller when losing, bigger when winning, the opposite of emotional trading. The strategy was secondary. Survival was everything. This approach changed everything. Survival first, strategy second. I added a 1 trade per day rule. No revenge trading, no spirals. News and session filters. The bot avoided high-impact events and only traded during liquid hours. Dynamic lot sizing risk per trade always matched the stop-loss distance, never exceeding 1% of the account. Administrative compliance. The bot tracked minimum trading days and switched to micro-lots if needed. Every feature countered a specific prop firm rule. The bot wasn't just trading, it was playing the firm's game. No flashy promises, just robust rule following. This is what actually works. Most bots miss these details, and that's why they fail. Even the perfect bot can't save you from yourself. No matter how advanced the algorithm, how flawless the code, or how many backtests you run, the real battle is always internal. Technology can automate trades, but it can't automate patience, discipline, or emotional control. The truth is, the most sophisticated trading system in the world is powerless against a trader who can't sit on their hands. The biggest obstacle is still the human mind. Our thoughts race, our emotions flare, and our instincts scream for action, especially when the market is quiet or moving against us. We crave certainty, but trading is a game of probabilities, not guarantees. The bot sits idle for days, impatience builds. You start to question the system, wondering if it's broken or missing opportunities. The urge to interfere grows stronger with every passing hour of inactivity. You see others winning, the clock ticking, and you override the bot for a quick trade. The fear of missing out takes over, and suddenly you're no longer following the plan. You're chasing the market, not trusting the process. That trade loses, sabotaging the process. One impulsive decision can unravel weeks of careful strategy, turning a winning edge into a losing streak. Or you panic when a bot trade goes into drawdown and close it early, missing the eventual win. The pain of seeing red on the screen is often too much to bear, even when the system is designed to handle it. Every manual intervention destroys the bot's statistical edge. Each tweak, each override, chips away at the very advantage you built the bot to exploit. The real challenge, trusting the system, letting it take small losses and accepting periods of inactivity. True discipline means embracing boredom, tolerating discomfort, and resisting the urge to control every outcome. Most can't do it, especially with big money on the line. The stakes feel higher, the emotions stronger, and the temptation to intervene almost irresistible. Prop firms know this. The challenge is a test of character, not just code. They're not just evaluating your bot, they're evaluating your ability to let go, to trust, and to stay out of your own way. Most fail because they can't let go. They sabotage themselves, unable to surrender control, and the opportunity slips away. The bot removes emotion only if you let it. That's the hardest part, learning to trust the process, to accept uncertainty, and to let the system do its job, even when every instinct tells you to act. How do you actually pass a prop firm challenge with a bot? First, run your bot on a demo for a full month. No touching, just observe. Second, code in hard stops, news session filters, and max trades per day. Make it impossible for the bot to break the rules, even if you want to. Third, program for all the little compliance details. Minimum trading days, profit consistency, every fine print rule. Your job is to build a vault around your capital and your emotions. When you go live, walk away. Let the bot run. Resist the urge to interfere. Success depends on your preparation and your ability to let go. Want a deeper dive on building a prop firm passing bot? Let me know in the comments.